Hello and welcome. My name is Andrew Fake, and I'd like to welcome you to this week's Minds and Money 5 at 5 show. This week, the show is sponsored by Signature Resources, Loncor Gold, and Prolific Mining, and is brought to you in association with our media partners, Resource Global Network. For those of you who don't know, we started the first 5 at 5 guests at 5 p.m. back in April 2020. We intended this as a stopgap weekly hour-long show, which bring the industry together whilst we were dealing with lockdown, COVID-19, and waiting for the return of events in person. 16 months on, we are now on episode 96. Some good news before we start is we will now be doing our first in-person event in about 3.5 weeks' time. That, of course, is our Minds and Money London show. Minds and Money London will take place on the 1st to 2nd of December. You should have received information about that event now. If you haven't already signed up, please feel free to do so. If you want some more information, my colleague Elaine has just gone and shared the slides with us on the screen. It's there, the website's there. You can also go and email me afterwards, and I'm happy to answer any questions that you have about the event. Back to sort of like this week's show, a few admin announcements before we start. Please have your video switched on. To ask a question, you've got a couple of options. You can post your questions in the chat box, where I've going to put like a hello and like a welcome message, and then we can pick your questions up and ask them to our panelists. Or you can wave your hands and we can go and unmute you, and you can ask your question live. We'll also be having some polling questions throughout the webinar where you can vote. For today's show, we are focusing on gold and precious metals. To discuss this, we have a great lineup of guests. They are Keith Weiner, Chief Executive Officer and Founder and Chairman of the Board of Monetary Metals, Robert Vallis, President and Chief Executive Officer of Signature Resources, John Barker, Chief Executive Officer of Loncor Gold, and Steve Fellows, who's the Geology Director at Prolific Mining. I think without further ado, I'd like to go and launch into a polling question, which I'm going to ask you all to start voting. Is the polling question on everyone's screens now? I think it is. The question is a very straightforward question. How much of your mining portfolio is it currently invested into gold and precious metal stocks? You've got a choice of 5 answers there. And whilst you're voting, I'd like to turn to the first guest who I introduced this week, who is Keith Weiner, Chief Executive Officer, Founder and Chairman of the Board at Monetary Metals. Keith, if you were to describe the gold market in 2021 in one sentence, what would it be?
In one sentence, I guess I would say
it kind of like can be a very, very long sentence if you want it to be.
All right, I'm not that good at run-on sentences. I would describe it as a continuation of the changed gold market post-COVID. That's how I would describe it.
Okay. Just kind of like ending the poll, which you've all sort of voted. I think that over 50% in gold and precious stocks was actually the most kind of common answer. I think you also put together a slide that you wanted to go and share with the audience about your thoughts on sort of like gold prices. Do you want to go and share your sort of screen and just like talk us through your sort of thoughts on where the market's heading?
Yeah, I was going to say. So let me preface this by saying that I think, rewinding back to the beginning of this millennium, gold enters this bull market essentially right after Gordon Brown sold half the UK's gold, drove the price down, hit a bottom. Gold was actually in backwardation one day during that episode. Backwardation means scarcity. The price had gone so low that everybody was buying the physical. And then, begins this stealthy bull market post, that era that continues through 2008. Obviously, during the crash, everything corrected, including gold, but the price of gold dropped the least, and the price of gold was the first to move on to record highs post, the crash. That continues until the market got way ahead of itself, particularly in silver, but also in gold in 2011. And then the post-2011 era was this period of disillusionment, disappointment, bit by bit capitulation. Everyone saying, "Why do I bother owning this stuff anyway? The world is fine." I thought maybe in 2008 the world wasn't fine, but by 2014, 2015, the world is fine. What do I need this for anyway? But in 2020, two things happened in a very dramatic way. One is the return on investing in paper currencies collapsed, right? So the 10-year US Treasury bond was 1.8% in January, and then post-COVID collapses to 0.5%. At the same time that the return went down, the risk went up dramatically as every government in the world, led by US government, became incredibly profligate spenders. And that's on top of what was already profligate spending. And we go from about $1 trillion deficit to many trillions anyway. I'll just leave it at that. So the risk goes up, the return goes down, people rediscover gold, the price of gold explodes, the price of silver explodes even more as a percentage. The gold-silver ratio, which had hit over 120 for the first time ever, pre-COVID, comes back down. It's now currently around 75. And that is essentially the response to COVID. Since then, everyone says, look at all this money printing, look at all this inflation, blah, 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 blah. I've written a number of articles arguing that what we see today in terms of skyrocketing prices is actually the result of really bad policies in a number of areas. Green energy. So in the UK, you at the same time passed the law that said no longer allowed to frack for hydrofracking for natural gas. At the same time, another law forcing all the heavy industrial users of coal and oil, including power companies, to switch to natural gas, which now has to be imported from Putin's Russia. So naturally, the prices of that are skyrocketing. That's going to affect everything from, food on down. And people looking at this, assuming it's monetary, because Milton Friedman said inflation is always and everywhere a monetary phenomenon, but it isn't monetary. And so that's the answer to the question, why is gold not responding to this skyrocketing of prices, particularly food and energy, but it's impacting everything else. I have...
Also, can I interject the question? I'm just interested. I mean, like, how much of your portfolio do you currently hold in sort of like gold and precious metals, and what would you advise your sort of like people that sort of follow you in the articles that you write, Keith?
So for me personally, a very disproportionate amount of my wealth is in monetary metals equity, and we're a gold company. So in that sense, gold, monetary metals as an institutional investor, by charter, everything is in gold and silver, either the physical metal or gold leases or gold loans. So I'm perhaps not a fair person to ask that of, but because of our position as a company and my position as the majority shareholder, gold and to some degree silver completely dominate my portfolio.
Asking a slightly sort of different kind of question. You and your company were in the news recently. You did what I kind of think was a very interesting deal. You financed a gold miner in Western Australia called Shine Resources, and I think you did it via a gold bond. Can you tell us like a little bit more about that deal?
So, gold bond is just like a conventional bond, but the principal is denominated in gold, and the bond is denominated in gold and the principal and interest are repaid in gold. And it's only worth talking about, I suppose, because the world hasn't seen one of these vehicles, a proper gold bond, since in the US 1933. I think the rest of the world similar time horizons. So everyone's like, this is radical and this is different. This is how the world used to be. Bonds used to be repayable in gold. So to the investor side, I think it makes sense because investors want to own gold anyway, and now here's gold with a return on it. To the mining company, it eliminates the price exposure, right? If you borrow dollars and the price of gold goes down, you could be hurt or even bankrupted. So mining companies are forced to put on hedges. The hedges carry with them their own risks and costs and complexities and so forth. Create a nice profit center for the banks that offer those hedges anyway, but I'm not sure that they serve the mining companies very well. So this was a nice little win-win deal. The mining company got the finance it needed, and the debt is denominated in the form of money that the mining company literally produces by pulling it out of the ground. And so it's a built-in hedge, or no need for hedge. And the investors got, as I said, interest on their gold. So that's our business model. That's what we do, is bring investors together with companies that are seeking gold or silver related financing.
And do you think that this kind of like deal structure that you did for Shine Resources, do you think that this is a way forward for the industry, or do you think it's a one-off?
Well, it's certainly our plan to scale that and make that the business model. I think it's attractive for the mining industry. I think it's attractive for the investors. So now it's a matter of, we're an early stage company, but it's a matter of execution and growth.
Okay, well, thank you very much for that. Keith will also be one of the institutional investors who will be attending this year's Minds and Money London. We'll definitely return to Keith later on in the show. I'd like now to move on to our first mining update. As I mentioned, this week's show is all about gold and precious metals, and we've got a really interesting project from Signature Resources. I'm just going to introduce Robert Vallis while he gets his slides up. Robert is a mining executive with a wide breadth of business and technical expertise across multiple areas, including corporate development, strategy, planning, business transaction development and execution, project and team management, financial evaluations, enterprise, continuous improvement, and mine engineering operations. So I think your slides are now up. Robert, would you like to give us an update as to why we should be considering Signature Resources?
Hey, thank you, Andrew, and welcome everyone. I'll move very quickly through these, just a couple slides, forward-looking statements, of course. In a nutshell, we are a high-grade brownfield development project located in Ontario, Canada. We have a massive land package, nearly 32 kilometers in strike length, over 270 square kilometers. It does have historical development that is decommissioned, but it has a shaft, 3 sublevels, over 28,000 meters of drilling. That's yielded over 234,000 ounces in historical resource that we have right now, grading just under 7 grams. It's prolific, and in terms of high grade, it's significant across the known mineralization. It's one of the big check marks for me. That 234,000 ounces resides right at surface and only down to 180 meters delineated. We know these deposits go kilometers deep, so it gives you an idea of the upside that we're drilling at. What we've accomplished so far is a 3,200 meter drill program, kind of a startup drill program, exploratory, that we did in the spring, winter. We're now on to and engaged with a 10,000 meter program focused on extending the known mineralization to depth and on strike, as well as discovering new zones that were just recently delineated. Of course, our focus is to get a 43-101 maiden resource out in the second half of 2022, next year. So that really emphasizes and encapsulates what our focus is in terms of rapid growth. Moving forward, we are located, as I said, in Ontario, Canada. We are in that tier 1 address just outside the Red Lake Gold District. Of course, you can see on the screen, you're not far from Thunder Bay, but of course, to the southeast, you've got Timmins and Kirkland Lake and so forth. Our project here, shown in green, our land package surrounded by infrastructure. We've got 2 First Nation communities with modern airports, with seasonal roads of permanent power on the Manitoba side, permanent power on its way up as we speak. On the Ontario side, permanent roads denoted in yellow. We operate out of Winnipeg, as it's really the mining hub for this entire jurisdiction. So again, tier 1 address, it's certainly benefiting us in terms of logistics and, of course, more importantly, the geology. Looking now more specifically about what's in the ground, this is a quick snapshot of what we've inherited and what we've started with. The 234,000 ounces right at surface here on the left, which is the east side. You can see the workings. There were bulk samples taken out of here, grading over 19 grams per ton. a connector raise here, grading over 28 grams per ton. That was 100 feet in height, 3 feet in diameter. The point is, though, it's very lenticular, friendly, and very well identified, as you can see through the 28,000 meters of drilling. We're working on the west side as well to unlock this and grow it. That's actually where we started drilling in the spring. And right now we're drilling deep here, moving this to depth, as well as exploring more towards the east. Specific to that, we just released recently these recent geophysical results. That 3D model I just showed you is within this box. You can see we've identified 6 significant targets, several of which are extensions, we believe, to the known mineralization, but others are brand new zones. And of course, our press release yesterday with our geologists continuing to work through historical data found test drilling historical exactly in the area we're about to drill, and it too indicates that these zones do continue and the high grade with it. So the Lingman Lake 100% owned deposit that we have here is certainly presenting itself rapidly to be a much larger scale system than we've started with, and that's our working hypothesis. The data is driving that now. The drilling's beginning to back it up. So definitely in an exciting point here. More and more drill results are coming now that we're drilling 24/7 now. We're very well positioned with our own drills. We have 2 of our own drills, our own crews, and fully stocked in terms of consumables. So we're well set in terms of de-risking and moving forward rapidly to bring this value forward to shareholders. The other side of the coin, and sort of the conclusion of my quick update, is the scale of the regional package. You can see this green border denotes the boundaries of our package, over 32 kilometers in strike length, but you can see it takes in over 90% of the entire Lingman Lake greenstone belt. That is that geologic environment where it's known and where you expect and look for high grade, large scale gold deposition, particularly along the margins. And you can see why we've taken in those margins. Within this purple claims box, that's exactly where our Lingman Lake project is, where we're drilling. No surprise, it's right at that margin, right at the deflection point. So the point is, we have a huge land package with a lot of upside potential. We've just recently completed flying the airborne geophysics on all of this. It'll be coming out very soon, about a week to 10 days. You'll see all of this lit up as it is now from the 2018 airborne geophysics that was flown on the land package we had then. Since then, and since my joining, you can see how we've expanded it, but also the number of high potential targets that we've already identified, denoted by these letters and number systems, a ranking system. The box here is where our Lingman Lake project is. So you can see this is a massive and prolific system. And the fact that we hold 90% of it is allowing us to really unlock where the regional potential is. I refer to as district level potential coming from the major gold producers. You know, that is the holy grail they look for in terms of centralized infrastructure, multiple mine zones. And so from that, we'll be narrowing all of these targets down to probably a top 3 and then getting teams on the ground and focusing on that. So that really sums up, Andrew and folks, where we are.
Okay, well, that's fantastic. Let's kick off with an opening question of my own. Apart from the maiden, you know, apart from doing your sort of like your sort of maiden 43101, what other upcoming catalysts can investors expect in 2022?
I think on one of the slides I just noted, showing the expansiveness of the mineralization as it's coming through the data that we're getting and the drilling we're going. I think the biggest catalyst will be significant extensions to what we have, both on depth and strike. In other words, scale, growth of scale in a rapid way, as well as new zones, parallel zones. So that's really acts as multipliers for us to be able to upscale the ounce discovery and generation, and therefore value to shareholders. So that's going to be the most important and most significant near-term catalyst.
Bringing in Keith from Monetary Metals, what sort of questions do you have for Robert?
We're, you know, as an institutional investor, we're interested in when you get into production, which is obviously the thing that we finance.
You're asking when we're when production would be possible for something of
Yeah.
this nature? Well,
What's it-
we're a ways from even defining what, if and what the production would be. Clearly, we're in the resource growth phase, very much so. But our target is to get the ounce count up for that maiden resource into a territory of 1 to 2 million ounces. And you can see from the growth potential we have, the ounces we already have so close to surface, that's reasonably achievable. At least we believe it is. With that, getting into that zone of ounces, 1 to 2 million, it really puts you on the radar of seniors, senior gold producers. It validates and initiates the next stage where you begin to do preliminary economic assessments and so forth, to begin to examine and take a first look at what a mine might look like in terms of is it surface, is it underground, is it both? What kind of rates of return can you expect? What kind of capital to build it? What kind of operating costs? These sorts of things all get folded in. And until we grow that resource to that minimal critical mass, if you will, it's really something we're not focused on and shouldn't be at this stage. I can say though, Keith, just to help qualify that given that we have such a plethora of high-grade gold mineralization right at surface, you saw the 3D sort of structure of it is very lenticular and friendly. Those zones are anywhere from 2 to 20 meters wide. So putting my engineering hat bag on, that speaks to low-cost operation, high rate of return, likely a high-grade starter pit, to help self-finance a bigger project. These sorts of things one can point to at this stage in terms of the characteristics that have been unlocked and what we're expanding upon.
Right, that makes sense.
Just as actually what a sort of a slight follow-up question from that. I think it was on slide 4 of your corporate deck, which I saw on your website. You said that obviously you're on the uptick of that Lassonde Goodman kind of curve. Is your aim to sell to a larger mining company, or is your aim to go and take the project into production? And linked to that, would you consider a JV?
Excellent questions. Number one, our goal is, as I've stated, is to grow this resource into a level where we can begin to assess its economic viability and potentials. In doing so, you also become essentially a radar blip. It's very shiny for producers. So therefore, there's two pathways that really present themselves. And in my many years of M&A with Barrick and Yamana, they usually answer the question for you. So it's either you're an acquisition target and you are acquired. That's one pathway. The second is your shareholders prefer, for whatever reason, depending on a rate of growth, value generation for shareholders, to keep going, to take it to that next level and move into early stage engineering and perhaps into development and production. We're letting the data, letting the ounces and the valuation delivered to shareholders drive that decision. Clearly, as I've stated, there's pathways that we can take, both of which would add significant value to shareholders. It's just a question of what the right decision is at that time. JV, you asked, I'm sorry, just to cap that second sub question you had, not at this stage. I mean, if we do find something, remember, it's two sides of our coin, the Lingman-like project where we're rapidly growing ounces, but we have a massive regional package. We're expect to have, and we're hoping to have further discoveries. So with multiple discoveries potential on site within your land package, it's possible you could find something that is perhaps beyond our scope. We did press release a discovery, a massive anomalous system that we have on our northwestern boundary that was found from the historical data. It's got it's a polymetallic situation. So we don't know if this is a massive porphyry sort of sulfide that a big major would go after and develop. If that is the case, then yeah, that's something you could JV and wisely should, because that's not something a junior gold company would even attempt to try and drill out. But either way, you're generating value.
Mm-hmm. There's one quick question from the audience. Can you drill through the winter?
Yes, we are drilling 24/7, 365, nonstop.
Great. Okay, so I think that answers your question, George Coles. Let's go on to our next mining update. So thank you very much for that, Robert. We'll come back to you later on in the show. Next update, I'll just introduce John while he gets his his slides up to go and share. It's John Barker, Chief Executive Officer of Loncor Gold. John has 17 years experience as a leading mining analyst, including with RBC, where as Managing Director, he headed up their London-based global gold mining initiative focusing on African mining equities. He now finds himself at Loncor Gold. The floor is yours, John.
Thanks again, Andrew. Yeah, I feel like starting with a bit of a straw poll myself here. This is our project. This is our main project, not our only project. This is our main project. It's the Dumby project. And so what value do you think, if I'm posing this as a question now to the floor, what value should be ascribed to a project that's grown from 1.2 million ounces to 3.2 million ounces, and we hope to 5 million ounces next year? That's this project. It's a project that really close by, we have Africa's largest gold mine. It's 130 meters away. It's Barrick's Kibali. And with a grade that I'll show you in a minute is significantly higher than the majority of the peer group. I mean, what value do you put on that? We have 85% of this project. And I can tell you our current value is around 80 million US. And in 2 months, we've got a PEA that, needless to say, with those sort of parameters, the ones I'm showing you in a moment, we're getting very excited about. But quickly, before you digest it, I better say, this is obviously forward. I'm looking at some forecasts, etc. You can look at our website for detail, look at previous 43-101s, etc., for further detail. So I touched on a few things. We're right in the top right-hand corner of the DRC where the star is there. And I just want to pull out, there's a lot of really interesting things happening in the DRC because there's world-class projects throughout the DRC. Ivanhoe Mining, they're developing arguably the most exciting copper project in the world currently. It commissioned ahead of schedule. It went into production ahead of schedule. They're looking at expanding ahead of schedule. And Ivanhoe Mining has grown into a very significant company. I think it's around $12 billion now, really on the back of what's been developing in the DRC. The other one I want to point out is Barrick Gold. We've got a JV on the Kibali gold mine. That's the red. And you can see when I mentioned it's on our doorstep, it's 130 miles away. 130 miles, that's not far in the DRC. And this is not just any gold mine. It's been mining since 2013, and it is Africa's largest gold mine. And I see they just announced all-in costs, I think just under $751 an ounce for Q3. So this is a quality. And the reason it's got quality is because of the grade. And the pit at Kibali, at Barrick's Kibali, is running at about the same grade as we are expecting for our pit. So you can see that's exactly why we're getting excited. We've got things on our doorstep to point to, which are real success stories in the DRC. So that's our total resources. We actually control 4.6 million, a mixture of indicated and inferred. We control in the contained, but it's the Dumby pit outline, 3.15 million in the pit at a grade of 2.37 grams per ton. And I say I expect that figure to get higher. It was 1.3 million at the beginning of last year. We've already grown it and we've continued to drill. And where we drilled, this is down the ridge, and essentially the area in the middle, the pink, is they're extremely high grade, and we've got gold of interest throughout that section, 130 meters wide, very wide. But so we've done infill drilling, and that 3.15, we'd hope in the next couple of months to take a large chunk of that 3.15 from inferred into indicated. Hopefully too, we can move that up by a few 100,000 ounces as well, from some of the drilling. And then importantly too, looking to next year, you'll see at the bottom LAD 16 and LAD 26. LAD 26 hasn't, we're waiting for the results any day. But with those sort of holes in place, we are hoping to come out with a underground resource, which combined to what we're finding in the Dumby pit, should take this whole area close to the 5 million tier 1 project. And I say, look at that grade, 2.37 grams a ton at a Dumby. But I think the key, when trying to answer that question that I posed on the front page, well, there actually is an answer coming in the next 2 months. In the first couple of weeks in December, we've got a PEA to be announced. we've got Senate out of South Africa doing a PEA currently. Everything's going to plan, touch wood, at that PEA, and they will be giving us a value to answer that question. And we believe it will be many multiples higher than our current market cap, as I said, of 85 million.
Okay.
And then I also mentioned the grade, and I think this is in many ways the key. There we are with the grade, and that's our total resource, but Adumbe is the majority of that. And Adumbe's grade is 2.35, so you can see high grade, higher than the majority on there. And the size of the ball represents the size of the ounces. Obviously, if we take Adumbe to 5 million ounces, that ball there will be larger than ore zones or predictive discovery. And that peer group covers Guinea, Burkina Faso, Ivory Coast, you name it, Mali's on there as well. And how much do you pay for what we think is extreme quality and very exciting size? Well, you're currently paying around $15 an ounce enterprise value. And that's why when we come out with our announcement, I think you're going to see, we hope to see a real increase in investor interest. And I'm sure there'll be a few corporates pricking up their ears, eyes, and pens to see what our project's all about. And that's, in essence, the story.
Okay. Well, thank you very much for that. I'm going to dive in with the first question, probably a somewhat obvious question, but as we've all seen, recent press comments suggest BHP have joined the major groups, beginning to re-look at the DRC and its significant potential within. What gives you confidence to achieve major things in what has been a country that many investors kept away from?
Look, we can talk about many things, but the proof is in the pudding with Barrick doing what they're doing at Kibali, so close to us at 130 miles away. And since they started production, I mean, it was Randgold initially found it, and they obviously went through the exploration work and developed it, et cetera, and it all went to plan. 2013 started mining gold. Last year, they exceeded production expectations. This year, they exceeded production expectations. So this is a mine that has been exceptional, around $900 million EBITDA last year. This is a cash cow for them. So that's what you can do in the area. It's not a matter of what you possibly can do. That's exactly what can be done on our doorstep. So we can look at that and we learn from what they've done. We've had drilling rigs out there. Over the last 18 months drilling away. Barrick have had drill rigs throughout the areas close to their projects, drilling away and finding ounces. And we've had no issues, disruptions, or anything like that. We've just carried on our business, and that's what we're going to do looking ahead. Just keep carrying on with our business, drilling and growing our project. You have to have security around, as I would do in Guinea. I've operated in South Africa and all those areas. We have security, but just the proof is in the pudding. Look at what Ivanhoe and the Chinese are doing down the south. Look what Barrick's doing. It's happening all over. And I think we must applaud President Tshisekedi as really the country's moving forward. And I think there's more interest from the US as well, which is helping to move forward. And I think that's one of the reasons, BHP is getting involved. They realize they can't miss out from the quality that is available in the DRC. So it certainly excites us.
Okay, thank you for that. Bringing in Keith. Have you ever invested in the DRC? And I guess the follow-up question is, what questions do you have for John?
Yeah, I think the big one is all about the jurisdictional risk. So we've looked at a project in Kenya, haven't moved forward yet. We're still trying to get our arms around what are the risks in doing business in places like that, and they're myriad. I mean, it's everything from, can you certify your gold as conflict free, to what is the risk that the government will confiscate things or cause problems, to what is the risk of violence at the local level. And so we're interested in these areas because there's a lot of opportunity there, but also cautious at the moment.
Yes, from our point of view, we have a direct 10% stake with the government. That's been for Adumbe. We have a mining license at Adumbe, which is a couple of steps ahead of most. Obviously, we still have the hoops to jump on the environmental side, but we've started that process as part of the PEA. It's all going along in a straightforward fashion. Royalties have been put in place for a number of years. and all the outlines have been put in place. And you know, we set to keep developing this. And I mean, I suppose it's a cliche now when people say every jurisdiction has risks associated, but it's a truth. And if you're looking at exploration, it tends to be in areas where either people haven't gone before, or it's been difficult to operate in one way or another. We're there, and we're very excited about what we have there. And certainly from our perspective, if you're looking at it as a $15 an ounce option on a $1,000 an ounce margin down the line, it's a cheap option, given that in 2 months, we've got a PEA coming out with, well, I'd encourage people just to scribble a couple of fingers down. I mean, in situ at the Dumby, we've got around $6 billion in situ. Obviously, there's a number of adjustments to do to that, but that gives you an idea of the scale of this project, given that it's at similar parameters and grade as Kibali. So we would say it's a ridiculously cheap option at $15 an ounce, which is what that chart at the end, I think, echoes. So yeah.
Another question from the audience. Other than Barrick's Kibali, what infrastructure is near to Loncor's project?
It's early stage from that point of view, and to get from Kibali 130 miles away, there's a road down there. It'll take about a day to get a rig down there, maybe a little longer if heavy rainy season, but that's not unusual. I mean, I went into Tanzania before Gator was developed, and it took me over a day to get from the Lake Victoria over to Gator in an old Land Rover. So it's not unusual. It's what happens in these places. But from our perspective, you know, we've got key management who've operated in the country for 30 years and found over 30 million ounces in this type of terrain. So we've got those key building blocks you want. And then currently, we've just finished with an airstrip. It's just getting signed off by the government now. That's going to help, obviously, with the logistics. And we're building up our we're also building up our camp and developing that too. So we're moving ahead on all fronts.
Okay, well, thank you very much for that. We'll definitely be coming back to you later on in the program, John. And I'd like to move on to our next mining update and ask Steve Fellows, Geology Director at Prolific Mining, to bring his slides up onto the screen. Just for doing that, Steve is a porphyry deposit expert with more than 13 years of experience, including the recent discovery of the PMC Henry Mountains Gold porphyry deposit in Utah. To go and tell us more, over to you, Steve.
All right, thank you, Andrew. This is really Prolific's first time talking with Mines of Money, so we're excited to show off our project. Let's see. So obvious forward-looking statements. So just to introduce PMC, Prolific Mining, to the community, it was founded by a family office. So the Gold Grabber family started off in the 80s doing platinum metals refining in South Africa. And after the success from that endeavor, they decided to branch out and start up their own family office that had interest in financing and commodities trading and properties, and then also in mineral resources. And so one of the things they were interested in was looking for a small project in a safe jurisdiction with preferably gold. And so they went out and looked and found a project in Utah. It's a historic project. It's been producing gold since the 1880s. And it brought their attention to the project. And so they came out and purchased it in 2009, began to work on what they would hopefully build a mill and do some underground mining and develop, at that time, was high-grade structures. And so that's what they started out doing. They began to put some money into the project, both from surface sampling and trenching, and then they began to do multiple RC drilling and diamond drilling programs. And all this was focused on, like I said, these small high-grade structures that ranged from about 3 meters to 10 meters wide and from a few grams upwards of 80 grams. They then began to do an underground operation. They put in about 1.8 kilometers of adits. and started to, and then built a mill in 2016. So this is a grinding, crushing, gravity and flotation mill. And so about that time, I was working as a professor at Utah Valley University and brought students up for an economic geology field trip. And I went in the undergrounds that they were developing at the time and quickly realized that they had a porphyry deposit. And so one of the things that they wanted to do was pursue this bigger kind of porphyry system. And so what we ended up doing was shutting down mining and milling at the time and put all our attention into developing the porphyry deposit. And so in about 2017, I joined officially as the chief geologist and began to do a drilling program. So all of this has led to us delineating the project, better figuring out the geology, and then ultimately putting in some deep discovery holes that are over 1 kilometer apiece deep, and they're about 750 meters apart, and both of them intercepted porphyry mineralization. And so we've been building off from that work. We did go through and put in a maiden NI 43 unconstrained resource. So this is based basically on the drilling we had at the time. And so prior to 2017, most of the drilling was focused on the high-grade structures in a few areas. Once I joined, we did a wider, more dispersed RC program. And all of this helped flesh out the project and help us get an understanding of the geology and the grade distribution. And so really this initial NI is just giving us an idea of where we're at. We understand that we need to optimize drilling and infill and both step out. And so something that we've seen with the project is it has quite a bit of open-ended mineralization where holes have stopped and good mineralization. It also has areas where we know there's good grade, but there's no drill holes in there. And so the mineral resource estimate, assigned those blocks essentially 0 grade. And so we need to go in there and fill that out. And so we're looking at about 110 million tons when we're looking at this kind of 0.25 cutoff. Averaging about 0.46 grams per ton. Important thing to note is that this project has quite a bit of coarse gold, and that doesn't necessarily get reflected in these results. So overall, we've been looking at putting in more work, and so we flew an aeromag just this summer. And so this image you can see is our aeromag with all of our exploration data on it, and essentially you can see that we have kind of an east and a west corridor of mineralization. One is centered on the mag high and the other one is off from the mag high. All of this is showing where we would likely want to put in our initial pre-feasibility study and look at getting a pit started in 1 or 2 locations in the project. And so one of the things we're looking at doing is kind of fast tracking a PEA and then getting some production going. And ultimately this would then allow for exploration of the deeper and project. All of this, the initial NI that we have only goes down to about 350 meters depth, but we do know we have mineralization down to 1 kilometer. So we have a big footprint. We kind of have a near-term and a long-term approach that we're looking at. A near-term is to take part of this into the PEA realm and get a open pit going. We've done quite a bit of metallurgical research on this, and we've seen that it's really conducive to heap leach. We have state trust land that would actually speed up that process. And so one idea is to get a near production going with the surface pits while we do the step outs and deeper exploration. And so that would be more of the long-term approach. And so we've had multiple tier 1 companies out over the last few years, and they've spent quite a few days out on the project and reviewing our data room, and they've had consistent interest in the project and kind of acting as unofficial advisors on the project. I think the owners of the project ultimately are really interested in pushing this project faster and getting drilling going in the next year. So that's kind of where we're at the moment. I think you're muted, Andrew.
I've muted myself. I'm sorry about that. I think I must have accidentally muted myself. So apologies to everyone for that. Let me just again ask the question that I was going to ask. I'm interested a bit to learn a bit more about your chairperson, who is Yehuda Goldgraber. I understand he owns 97.5% of the company. Can you tell a little bit about him and his background in the mining industry?
Yeah, so Yehuda is the chair of the prolific mining, but he also represents the shareholders, which is the Goldgraber family. And so, as I mentioned, in the 80s, they started with a platinum group metals project. And so as their family office branched out into the different areas that they're interested in, Yehuda took on the actual mining. His background in it was actually very limited. I think that they first just had the initial thought, let's go out, let's find a project in a low risk jurisdiction, let's build a mill. We understand, refining, we understand machinery, let's get out there and get a mill going. And I think what Yehuda found very quickly is that, they at one time had a big man camp. They were flying in underground miners from Stillwater. It was quite expensive. And so one thing that I like about Yehuda is he's very good at surrounding himself with good experts and quickly adjusting. And so what he's done with this project is he's kind of learned very quickly about the mining industry and then learned that he needed to surround himself with the right people and then to pivot. And that's what he's done. And since they started out with those high grade undergrounds, they've realized that really they've got a tiger by the tail with this much larger gold porphyry system, similar to ones we see in the Maricunga or in South America. And so he's shifted his entire attention to developing this overall larger gold porphyry system and making that his focus.
Yeah. In terms of, again, just looking through some of your slides beforehand, so as far as I can work out, there's been mining activity in this region since 1889. So obviously obviously for like a very, very long time. Can you just be precise? What opportunities did your predecessors miss, which you hope to exploit?
Yeah, so most of that historic mining was centered on just these high grade structures, which were phyllic zones that, could be quite high grade. They had wire gold and coarse gold. And so that's ultimately what they were doing, narrow undergrounds and stoping. And so I think what people have missed on this project is that it's an overall much larger gold porphyry system and might be even part of a larger district. We've been working with our engineering firm, Global Resource Engineers out of Denver, and they think that after looking at our recent geophysics, there's a much larger opportunity that even our Bromide Basin, where you saw the focus of our results from, are just part of a larger system overall. And so I think that's kind of the differences. Early on, it was focused on high grade and small tonnage, and now we're looking at, a porphyry system. And so I think the Goldgraber family realizes this is a project that's bigger than one private office. And so that's really why they're interested in reaching out to the mining community to find a JV or to have some, find some synergy in the market to come out and develop the project.
Okay, thank you for that. Bringing in Keith Weiner, what questions do you have for Steve?
I guess the same as the others. Is there plans to get into production? I think you touched on that a little bit early, to start developing revenues. And, how do you see that, or you just want to continue to develop the resource?
Yeah, I think that the family ultimately would really like to get this to a pre-feasibility. I don't think that they themselves are interested in taking it to production on their own. Working with our engineering firm, we're looking at probably 30 to 50 holes in kind of that 300 to 500 meter range to get a large portion of this porphyry into a pre-feasibility study. And so that's ultimately, I think, the direction we're heading. But because it's a private owned family or family business, they're very interested in other opportunities as well. They're not really restraining themselves to any one strategy. And so at this stage, they're pretty open to things. I know that they've personally thought about doing a small heap leach and pit themselves, but they're also interested in seeing, what interest there is in the mining sector with maybe tier 2 or 3 companies.
And just a slight to build on from Keith's question, there's a question from the floor from John Zadovich. Can you just please add a bit more color to the potential fast track surface production?
Yeah, and so ultimately what we have is porphyry mineralization right up to surface. Additionally, it's got high grade structures juxtaposed on that porphyry mineralization. And so we know that right from the surface we have mineralization. Working with our engineering firm, we know that with 30 to 50 holes, we could take that to a pre-feas. There's a couple of ways we could go about it, from 2 smaller pits to a larger pit. All that depends on our immediate drilling program. And so we'd be looking at probably 2 to 3 years from this point to get it into production. We could build a heap leach, and like I said, we've had encouraging metallurgical results on heap leach. With 80 to 90% recoveries even in the sulfide zone. And then a lot of that has to do with the geology of the gold porphyry versus, say, a copper porphyry, where we don't really have cyanide robbing minerals. And so there's some of that. We've also been working closely with like NEPA and the BLM, and we have a good relationship with them, and that will help fast track things. Additionally, we have patented land that can speed things up as well. And so all of this can be used to really get production going in the next couple of years after we can get, the next 30 or 50 holes put in.
And then just a question for you that I'd actually like to ask the rest of the audience. I'm just curious as to, when I'm talking to investors these days, ESG is becoming increasingly important. What is Prolific's ESG mining credentials?
Yeah, at this stage, as far as Prolific's concerned, I would say that we're pretty limited on our mining. I wouldn't say that we are a company that could take on a large porphyry completely. So what we could do is definitely look at smaller projects, but what we'd be interested in is finding a JV with someone who's got those credentials.
Okay. John Barker of Loncor Gold, what are your ESG credentials?
We've been in the country now for 13 years. And so over the time, through the ups and downs of the cycles, obviously we've had more to spend at some times than others. But we've built a clinic, schools, rejuvenated schools. Currently, what are we doing? We touched on infrastructure earlier on, improving roads in the areas. We've also been drilling for water for the local communities too. But as we're developing so quickly, this is obviously a critical part for us. So we're exploring a number of other new initiatives too to look at the ESG. But we have been active, and going forward, we have to be more and more active. And anybody who wants to look at the website, you'll see we've had a number of initiatives which we'll expand on.
Mm-hmm. Keith, you've obviously mentioned you've been in this sort of Q&A section. You've mentioned as to how important it is when you're investing into a mining company as to its sort of path to production. I'm just curious, from an investor, how highly does that mining company's ESG strategy matter to you when you are looking to make an investment?
Well, so far we haven't had like regulatory pressure on us for ESG, so we're primarily focused on the economics. And that said, obviously ESG can affect the economics. If a company is perceived to be dirty, it may have a lot of regulatory barriers that are ultimately going to be economic issues. But at the moment, we're not really focused on ESG per se.
Okay.
Yeah, and if I can go back, Andrew, I kind of misheard the question.
Yeah.
So yeah, in Utah, there's quite a few opportunities for working with the community. We've talked to both the local and state governments, and there's different money out there that can actually help infuse money into the community out there. And so they're very interested in getting programs going to help with Native American communities in that part of the state. And so we've been working very closely with permitting agencies and NEPA, and all of that is helping us to kind of be a fixture in the community. And so it's something that's important to Prolific, and that we've been working with everyone in that area. There's quite a bit of opportunity too with the Utah state government, who would really like to see a big project in this part of the state just to lift up the community.
Okay, thank you for that. And then for yourself, Robert, I think when you were going through your presentation, you mentioned that you were working with 2 First Nation communities. So obviously ESG is important to you, but would you just like to expand on that a little bit?
Yeah, certainly. It absolutely is fundamental, at least in our jurisdiction and with our nearest neighbors. We have ramped up and continuing to ramp up the consultation and engagement there to formal levels. And it's something that's progressing well. We have had that historical and continued support, but taking it to that formal level of engagement and consultation is most important, particularly when it comes to beginning to engage the communities and ensure you've got a good transparency in terms of understanding of who you are, what you're doing, and where you're going. The other half is that I mentioned it is a historical property. Never did reach production. It's about as close as you probably get to production without reaching it in the late 40s, early 50s, where they simply ran out of money. They were mobilizing equipment there at the time. But because of that, we inherited historical cleanup items and stuff that was completed, but it gave us the opportunity to demonstrate, importance of environmental stewardship and responsibility as custodians of the land and co-custodians, I should say. So we've made and continue to make efforts fairly recently and continuing in terms of closure plans, these sorts of things, continuing to address and clean up items that were related to that historical sort of situation. It's nothing that presents an overhang for us, but it's an opportunity to demonstrate how to do it correctly, and we're definitely advancing and moving well on that.
Thank you very much for that, Robert. I think that this brings us sort of like nearly to the end of this week's show. Just like to once again mention that our first in-person event for 2 years, Minds and Money London, 1st to 2nd of December, will take place in a month's time. We also have some drinks taking place in London on the 18th of November. You'll all be emailed details about that. All that remains for me to do is to go and thank our guests, who were Keith Weiner of Monetary Metals, Robert Vallis of Signature Resources, John Barker of Loncor Gold, and Steve Fellows of Prolific Mining, and to thank once again our media partner, Resource Global Network. This time next week, we'll be discussing copper with some great copper mining projects. Until then, stay safe. Thank you very much.